certain concepts, then we will try out a few short questions at each part, so that to make sure that we can apply the concepts and test on your understanding. If you have any questions, then feel free to ask them at the end of each part. Then next, on your exam. So your exam will be in about 1 month's time. I think it is on the 9th of October. Not sure whether you're aware, but I will just briefly go through the format of the exam paper. It will be 100 marks and consisting of 80 marks for income tax in section A and 20 marks for GST topics in section B. So today's topic, withholding tax, is income tax topic, which will be tested in section A in question 4 for 10 marks. And your exam is 3 hours and 15 minutes. So that means you should allocate about 20 minutes for question 4, which is for 10 marks. Yeah, so for my sharing, I will try to focus on the key areas that are likely to be tested for your exam. And because the notes today that I'll be going through is comprehensive for completeness, so I will also try to highlight the areas that are not so important and likely will not be tested for your exam. And you can go through these parts on your own for your own understanding and completeness of learning. Okay, any question at this point? If not, then I will start the session. This slide here is a glossary of all the short terms that you'll be seeing throughout the rest of the slides. Yeah. So you can come back to this page to refer to the term for the full name. Okay, for my sharing, I'll be covering these few parts that is shown on this slide. So I will run through what is withholding tax, then what type of payments are subject to withholding tax, then what are the domestic withholding tax rate for the payments, and also application of tax treaties for withholding tax. And lastly, the administrative matters on when and how to file and pay withholding tax to IRAS. So as I mentioned just now, the marks allocated for withholding tax is only 10 points, 10 marks for your exam. So the main objective for withholding tax is really for you to gain a basic understanding of the key principles of withholding tax. So the coverage will not be at an advanced level, and also for exam, you will not be tested at an advanced level. Yeah, so basically it's on basic understanding of the basic principles of withholding tax. Okay, this slide here shows you the importance of withholding tax for Singapore tax collection. So as you can see from here, this pie chart, which is taken from the IRAS annual report for FY 22-23, withholding tax is actually about 3% over here, about 3% of the total tax collection of IRAS revenue collection. Okay, first I will start on what is withholding tax. Okay, basically the slides are the same in your set, just that there are some parts which for this part I actually moved the order so that I can explain to you. Yeah, so just now at the start I mentioned that withholding tax is actually an income tax topic tested in section A of your exam. So what is withholding tax? The first important principle that we should know is that withholding tax is not a new type of income tax. Basically, withholding tax is just a tax collection mechanism to collect income tax from Singapore non-tax residents. So for exam, we will focus on withholding tax for corporate income tax. We will not be covering withholding tax for individual or personal income tax. So the first principle we need to know is, since withholding tax is a tax collection mechanism for Singapore non-resident, then we need to understand what is Singapore non-tax resident, yeah, and how to determine what kind of companies are considered as non-resident to collect withholding tax. So on this screen here, you will see a recap of the tax residency test, which was already covered in your previous topics in the previous week for income tax. So to recap for companies, the tax residency test is based on the place of control and management of the company's business. So generally, we will base the place of control and management on where the company's board of directors meetings are held. The tax residency test for companies is not based on the place of registration or incorporation. So for example, if a company is incorporated or registered outside Singapore, but if the control and management of the company's business is exercised in Singapore, then the company is considered as a Singapore tax resident. On the other hand, let's say if the company is incorporated or registered in Singapore, but if the control and management of the company's business is exercised outside Singapore, it is considered as a Singapore non-tax resident. So now we understand who are the non-resident to withhold tax. Then next we need to understand what is the scope of income tax, which are the types of payment that will be subject to withholding tax. So as I mentioned, withholding tax is not a new type of income tax, and therefore the scope of income tax will still be similar and aligned in terms of the concept that you learned in your corporate and income tax topics in the past 2 weeks. The first basic concept is the scope of income tax in Singapore. To recap, Singapore adopts a territorial tax system. So this means that only income sourced in Singapore will be subject to tax in Singapore. Then for foreign source income, it will only be taxable in Singapore if the income is received in Singapore. And this basic scope of income tax rule will be applicable whether the person is tax resident or non-tax resident in Singapore. Let's look at an example of what I've explained just now. So on this screen here, you will see, this picture here showing Singapore and the rest of the world. So in Singapore, you have the payers, for example, those customers making payment to person A. Yeah. This person A is situated in Singapore. Yeah, as I said just now, to determine the residency, let's say it's a company A lah, because the focus here for our withholding tax for your exam will be on corporate income tax. So company A in Singapore is based in Singapore. But as I mentioned just now, tax residency is not based on whether you are incorporated or registered in Singapore, but it's based on the place of control and management. So let's say even if company A registered in Singapore, so company A, even if it is registered in Singapore, but then let's say the place of control and management is exercised outside Singapore, then it is actually non-tax resident. And then any payment from the payer in Singapore, the company A here, will be subject to tax, subject to withholding tax. Okay. So let's say person A is registered in Singapore and the place of control and management is also exercised in Singapore. Then the payment from payers in Singapore to company A in Singapore will not be subject to withholding tax because our company A is a resident of Singapore. It's not a resident, non-resident. As I said, our withholding tax is only applicable to non-resident. Yeah. Then to explain the scope of income tax. So the income stream from person A paying here will be considered as a Singapore source income because this is a Singapore income arising in Singapore. Yeah. So as I mentioned in the scope of income tax just now, income source in Singapore will be subject to tax in Singapore. Okay. So there's another situation whereby it could be company A receiving income from outside Singapore. Let's say from this company B outside Singapore. So this income stream, the one in the yellow arrow, this payment from company B outside Singapore to company A in Singapore will only be subject to tax in Singapore if this income is received in Singapore. Yeah. This was mentioned in my previous slide for the taxation of foreign source income. Foreign source income will only be taxable in Singapore if it is received in Singapore. And let's say company A derive this income from company B, but this income is not received in Singapore, then it will not be subject to tax in Singapore. Okay. That could also be another situation. Company B outside Singapore, and also place of control and management is outside Singapore, so it is confirmed to be a non-tax resident. So when the customers in Singapore make payment to company B outside Singapore, this is considered as a Singapore source income, right? Yeah, but because payment is made to a non-resident here, it is still subject to Singapore income tax. Okay. Then the issue here will be for this arrow, the green arrow labeled 3, then how is Singapore going to collect the tax from this person outside Singapore? Yeah, so that is when we apply withholding tax as the tax collection mechanism. We will make the person here the payer in Singapore withhold tax from the payment to company B outside Singapore. Yeah. So this is called withholding tax. Then there could also be a situation which is shown here in the red arrow labeled at 4. So this is income outside Singapore and also paid to a person outside Singapore, not resident in Singapore. Yeah. So this part here is actually out of scope because as I mentioned just now, our scope of taxation is a territorial basis system. So for such income, you will not be subject to tax in Singapore. So there's no Singapore tax consequence, yeah, for arrow 4. So this slide here shows you how Singapore collect income tax from non-tax resident. So the main mechanism will be withholding tax, as I explained just now. This will be the primary mechanism that we apply to collect tax from non-tax resident. There are also 2 other methods shown on this slide, which is appointment of agent and direct assessment. These 2 methods are less commonly used, but it's for completeness of your understanding we put here all the various methods that Singapore used to collect tax from non-tax residents. Okay, now shall we try a question to see whether you understand what I explained just now? Okay, so on this screen, you will see the question. The scope of income chargeable to tax in Singapore is the same for both tax resident and non-tax resident. There are 3 options here: true, false, and it depends. Okay. Okay, the correct answer should be option 1, true. So about half of you got the, I think 39%, close to half, got the question correct. Yeah. So why is it true? As I mentioned in the earlier slide, the scope of income tax will be the same regardless whether it is Singapore tax resident or Singapore non-tax resident. So it is the slide referring to where Singapore adopts a territorial system of taxation whereby we only tax income which are Singapore source income or foreign source income which is received in Singapore. So let's try another question. This one is talking about Singapore branch of a foreign company is a tax resident of Singapore. Option 1, true. Option 2, false. Option 3, it depends. So the answer should be option 3, it depends. Yeah, as I explained just now, Singapore tax residency for a company depends on whether the control and management of the company is exercised in Singapore. And generally, we will look at where the board of directors meetings are held. Yeah, so we cannot straight away jump into conclusion that the Singapore branch of a foreign company will be a resident or non-tax resident of Singapore. We need to look further to where the control and management of the business of the company is exercised. So I will pause here to take questions. Any questions on the tax residency principle? If no, then I'll move on to what type of payments are subject to withholding tax. And at this part, right, for each type of payment, I will also talk about the domestic withholding tax rate. So in the Income Tax Act, the applicable provision for withholding tax will be Section 45. Okay, so in Section 45, right, it lists down all the payments that are subject to withholding tax. So this slide here summarizes the list of payment under withholding, subject to withholding tax in Section 45. For the purpose of our training and your exam, we'll be focusing only on the first two type of payments, which is under Section 45, interest, and also Section 45A, payment of any income referred to in these two particular section in the Income Tax Act. So we focus on these two areas because these will be more common type of payments, and also the principles to apply these two sections will be more complicated. Yeah. So for Section 45, we'll make reference to Section 12. Section 12 are actually the deeming provisions in the Income Tax Act on income which are sourced in Singapore under specified situations. And for our training and also for your exam, we'll be focusing on section 12.6 and section 12.7, A, B, C, and D, which I mentioned in the previous slide. Yeah, so for section 12.6 and 7, these are the type of payments which are covered under section 45A. So which is why we focus on these sections, the one which are highlighted in yellow on the slide here. Okay. So this is for your information about trading operations partly carried on in Singapore. So these are also subject to tax, but this is not the focus of the training and your exam. Okay, so this one summarizes what has been said in the previous slides. So provisions under Section 12 of Income Tax Act deem income to be sourced in Singapore under specified situations, and tax on this deemed income will be collected via withholding tax mechanism under Section 45 and 45A. So first, I will talk about Section 12.6 on interest payment. So on this slide here, you will see the provision which is taken from section 12.6. Yeah, so maybe I'll give you about 1 minute to read through this provision. So for section 12.6 covering interest, right? This provision, the way to see is as actually two types of payment covered under 12A. Any interest, commission fee, or any other payment in connection with any loan or indebtedness. So this is the first category of interest income that will be subject to withholding tax. Or the second category will be any arrangement, management, guarantee, or service relating to any loan or indebtedness. Yeah. So the first part is really like the interest type of payment. And then the second one is more like the service related type of payment relating to any loan or indebtedness. So these are the two categories of income covered under section 12.6A. And this will be subject to withholding tax if the following conditions are met. So part 1, born directly or indirectly by a person resident in Singapore, or a PE. PE means permanent establishment in Singapore. There is an exception. So unless it is in respect of any business carried on outside Singapore through a PE outside Singapore, or any immovable property outside Singapore. So unless it falls under the exception, and if it is born directly or indirectly by a person resident in Singapore or PE in Singapore, and these two types of payment will be subject to withholding tax. There's also another condition. So it's an all condition. So if this condition is not satisfied, we also need to see the second condition, whether it is deductible against income accruing in or derived from Singapore. Yeah. So you see, the conditions are very aligned with our territorial of taxation. So anything arising in Singapore will be subject to tax. Okay, so there's also another category, even if it doesn't fall under section 12.6A, doesn't meet all these conditions, but we also need to look at whether any income derived from the loans, where the funds provided by the loans are brought into or used in Singapore. Yeah, so if it falls under B, then withholding tax will also be applicable. So you'll see that B is also very aligned with our scope of taxation concept, whereby the funds provided by such loan are brought into or used in Singapore. So it's like income source in Singapore, which is why the non-resident will be subject to tax in Singapore. Okay, so later on we'll go through some example to apply this provision. So just now, in section 12.6 provision, you see some of the terms used like PE, permanent establishment, and person. So these two terms are actually defined in section 2 of the Income Tax Act. Yeah. So on this slide here, we have listed down the definition taken from section 2 of the Income Tax Act for PE and person. Yeah, so it's actually quite self-explanatory. And in your exam, we will mention whether in the case whether the company has a PE in Singapore. Yeah, so you don't have to memorize the list here. I think your exam is open book, right? If necessary, you can always open the Income Tax Act to section 2 to look at the definition. So same for the previous provision here. Since it's open book, you can refer to the Income Tax Act. You can also refer to section 12.6A and B for the scope here. Yeah. So there's also a provision, section 12.6A, which clarify further on the scope of section 12.6. So basically, over here in section 12.6A, this was to legislate what was issued in the past by Ministry of Finance, MOF, press statement in 1977 to clarify the scope of section 6. Yeah, so basically what is clarified is that for the services which are performed outside Singapore, it will not be subject to withholding tax in Singapore. And for guarantee, if it is provided by a person outside Singapore, and if this person also does not have any, is not in connection with any business in Singapore, then you will not be subject to withholding tax in Singapore. Yeah, so this is the definition of non-resident person for the purpose of section 12.6A. Okay, let's try some questions to apply the concept for 12.6. So for this question, on 5th August 2023, company ABC purchased some goods from a US supplier for 100,000. The US supplier is a tax resident of US and does not have a PE, permanent establishment in Singapore. So in this case, we assume no tax treaty is applicable. Is the payment of goods by company ABC to the US supplier subject to withholding tax? The answer should be option 2, no. I think most of you got the question correct? And why is it no? Okay, the way to look at this question, right? In this case, we are talking about purchase of goods from US supplier. Yeah. So is this type of payment covered under section 12.6? Answer is no, right? Because 12.6 just now we are talking about loans or indebtedness and interest. Yeah. So for payment made for purchase of goods from non-resident, the payment of goods is not a payment which falls under any particular provision under section 45 to 45A, 45 each of the Income Tax Act. So answer should be no. Okay, let's try another question. On 5th August 2023, company ABC purchased some goods from a US supplier for $100,000. The US supplier is a tax resident of US and does not have a PE in Singapore. The US supplier imposed interest based on credit terms given to company ABC. The first interest payment of $100 was due on 31st August 2023. Assume no tax treaty is applicable in this case. Is the interest payment by company ABC to the US supplier subject to withholding tax? Option 1, yes. Option 2, no. The answer should be option 1, yes, and most of you got the question correct. Yeah, withholding tax is applicable because it is interest payment and it is in connection with indebtedness. The indebtedness here, we are talking about the amount owing by company ABC to the US supplier, the $100,000, which is under the first category of payment in section 12.6A. And either of the two conditions in section 12.6A is met. So in this case, the interest payment is borne directly by Singapore tax resident company ABC. Yeah, so answer should be yes, withholding tax is applicable. Okay, so for section 12.6, next we'll talk about the relevant withholding tax rates provided under our domestic tax law. So for withholding tax on interest payment, we will be subject to a 15% final withholding tax rate. What this means is that this will be the final tax that is applied on the gross interest payment made to the non-tax resident. Yeah, so there will be no claims for deduction, etc. However, if the non-resident has a PE or trade in Singapore, it can also opt to be subject to withholding tax at our prevailing corporate income tax rate, which is currently 17%. And then what this non-resident will do is to file a return with IRAS on the gross interest income and claim the relevant tax deduction. Okay. And so withholding tax rate will be under domestic law will be 15% final, or in the second scenario that I explained just now, based on prevailing corporate tax rate, if there is a PE or trade in Singapore and the non-resident file a return to claim deduction. And there is also a third category, which is this withholding tax rate in the first two scenarios can actually be further reduced or exempted under a double tax agreement that Singapore has with its treaty partners, which I'll cover later on. There are also other types of withholding tax exemption or incentives provided under our Income Tax Act or Economic Income Act, other than those which are mentioned in this slide, but these will not be covered for the exam. Okay, so next we look at example on how to apply the withholding tax, how to calculate the withholding tax. So in this example, company A, the payer in Singapore, is liable to pay loan interest of $1,000 to company B, non-resident in a foreign country. In this case, we assume that the final withholding tax rate of 15% is applicable. Okay. So it's very straightforward, right? We just take the $1,000 gross interest income multiplied by the final withholding tax rate of 15%. So company A, what company A will do is to withhold $150 and then pay it to IRAS. And the balance of $850, then they will pay to company B, the non-tax resident in the foreign country. Okay, next we'll look at another scenario on calculation of the withholding tax. So in this case, we are talking about cases whereby the withholding tax is actually borne by the payer, not the payee. Okay, so maybe because of bargaining power, the payee tells the payer that it doesn't want to bear any Singapore taxes. Anything arising from the transaction will be borne by any tax arising from the transaction will be borne by the payer. So in this case, company A, the payer in Singapore, is liable to pay loan interest of $1,000 to company B, the payee in a foreign country. The contract provides that the interest of $1,000 is net of tax. Yeah, so it's like the payee telling the payer that they just want to receive $1,000 and anything else will be borne by the payer. So in this case, we also assume the final withholding tax rate of 15% is applicable on the interest. So in this case, what we need to do is to regross this $1,000 to calculate the withholding tax, which is going to be payable to IRAS. So company B will receive $1,000. We take $1,000 and regross it by the final withholding tax rate of 15%. In this case, we use 100% minus 15%. So meaning that the $1,000 is actually the 85% received by company B. Yeah. So by regrossing, we'll get a gross interest income, regross interest income of 1176.47. And from there, we apply a 15% final withholding tax rate, which gives us 176.47. So this will be the amount that company A, the payer, has to withhold, has to pay as a withholding tax to IRAS. And then it gives company B the net amount that company B wants, the $1,000. Okay, next, let's try a question to test on the understanding of calculation of withholding tax. So in this case, it is the same example as just now on the US supplier paying interest of $100. No, sorry, the company ABC in Singapore paying $100 interest to the US supplier. Yeah. So in this case, the contract provides that the interest of $100 is net of tax. Calculate what would be the amount of withholding tax due to IRAS. The answer should be option 1. Yeah, most of you got the question correct. So why is it option 1, $17.65? In this case, the question says that the interest payment is provided in the contract is net of tax. This means that the non-resident will receive $100. So we use the $100 to regross it by the applicable withholding tax rate. In this case, is 15%. So $100 divided by 100% minus 15% will give us 70. Sorry, will give us 117.65. Yeah. So once you get the regross interest amount of 117.65, you multiply it by the final withholding tax rate of 15%, which will give us $17.65. So the answer should be option 1, $17.65. There is also, I think somebody chose $17, option 2. Option 2 is not correct in this case because the question has tell us that the non-resident does not have a PE in Singapore. Yeah, so just now I mentioned that if the non-resident has a PE in Singapore or carry on a business in Singapore, then it can choose to apply the prevailing corporate tax rate of 17%. But in this case, it does not have a PE in Singapore. And also it cannot be 17% because the relevant tax rate here is not 17%. And I think there are a few who chose option 3, 15%. Yeah. So it is not 15% because the question here says that the contract provides that the interest of $100 is net of tax. So we need to use the regrossing method. So it cannot be $100 multiplied by the final withholding tax of 15%. So option 3 is not correct. Okay, so nobody choose option 4. Okay. Okay, the next few slides are here for your information and completeness of learning will not be tested for your exam. Yeah. These are more advanced topics. Yeah, so with this, I actually come to the end of the interest payment part. So any questions before I stop for a short break? I think there are some comments in the chat box. Okay, I think Alistair highlighted that the exam should be closed book. Okay, let me confirm on this because I thought you can actually bring in your Income Tax Act. That's what I meant by open book, Income Tax Act only, not bringing in all your course materials. Then Chia Yong, regarding tax resident, the new requirement for calendar year, a company must have one director based in Singapore who holds executive position, have one key employee. Does it still meet the condition to have control in? Okay, for Chia Yong's question, right? The first question, control and management, whether it must still meet the condition to have control and management in Singapore, the answer will be yes, because this is still the basic principle, which does not change. All the key indicators, I think those are just guidance or examples of how to apply control and management. Then question 2, must company fulfill both A and B, meaning having 2 persons? Okay, this part here, let me get back to your on Chia Yong's question B, because I am not very sure exactly where he Chia Yong, are you there? Can you unmute to clarify on your question? Where is the source of this information?
This is from IRA's website.
IRA's website, huh?
So it didn't state either or. It's just a two cross that you must have a director that based in Singapore who holds the executive. So my understanding is that same person can be the CEO and the director.
But okay, but just to answer your question, control and management is still the relevant tax residency test for companies. Yeah. You are going,
Because
yeah, okay.
that will also determine if the requirement is to have two person, then it's different to have as opposed to have one person holding two title.
Okay.
If you can clarify that, then that would be
Yeah,
good.
and
Thank you.
I will also share with the class. I'll copy this question after the session, and then I will give you the answer after this session. Then any other question? Or anyone want me to explain again the concept covered just now, or any of the poll question?
Hi, Esther.
Yeah, hi.
I just want to ask to confirm, based on the examples that we have just now. So let's say if the company B has a PE in Singapore, does that mean the withholding tax will not be applicable?
You mean the company ABC
Yeah.
and supplier question, huh?
Yes.
So you're saying if the US supplier has a PE in Singapore, the withholding tax is not applicable. No, the first question is we still need to know who you are paying to. If as long as you are paying to a non-resident, because withholding tax is a tax mechanism for non-resident, right? If it is a non-resident, then it will be applicable. But then the next question you need to ask is what type of payment are you making? Because only payments which fall under the list of payment under Section 45 will be subject to withholding tax. So in this case, even if the US supplier is a Singapore tax, okay, if it's a Singapore tax resident, then of course no withholding tax lah. You'll be subject to tax in the normal way. Yeah.
Okay.
Yeah, but if it has a PE, I mean, if your question is a non-resident but has a PE, right, in Singapore.
Yes.
Yeah, so it depends on the type of payment. Just now, the first example show you the type of payment which is not caught under Section 45, right?
Yes.
Yeah, the payment of goods. Okay, that one is out. Then but then it has a PE in Singapore. Yeah, so it's actually caught under Section 12(1), because that one just now we talked about. Let me show you.
Oh, okay.
The operation, the trading, this one, right? Trading operations, it has a PE in Singapore, but we need to, but having a PE does not mean that it may fall under here lah. You need to see whether the US supplier actually partly carries on a trade or business in Singapore. Yeah. If it does, then withholding tax is applicable because it is a non-resident. We need this method to collect tax from non-resident.
Okay. Okay. Thank you.
Yeah. Okay, any other question? If not, then we will stop for a 10 minutes break before I move on to the next section on Section 12(7), the different type of payments under 12(7), because that part will be also quite heavy. So let's take a short break before going into the next part. So So we take a 10 minutes break and resume at around 10:05. Okay. Yeah, see you.
Esther, I will be sharing a clock
Mm.
for the break. Is that
Yeah,
good for you?
resume at 10:05.
10:05. Okay,
Yeah.
so I'll share screen, yeah?
Yeah, okay, thank you.
Okay.
Hey, hi everyone. Welcome back. Okay, before the break, right, we have some questions at the chat box. Yeah, I have just typed in some responses there. Yeah, in case you have not noticed, or I go through them. So there was okay, so thanks Alistair for highlighting and asking whether the exam is closed book. So what I meant was you can actually bring in your income tax and GSTX. Yeah, so that remains the same. So I have checked during the break. So candidates may not bring in any of your learning materials into the exam except the Singapore Income Tax Act and the Singapore GST Act. And it is not compulsory for you to bring the acts into the exam room. So, yeah, so it's optional. Then for Yong Hui's questions regarding tax residency, I also checked the IRAS website, but I still could not find the source of the information mentioned in the question. And okay, maybe I just share screen with you on what I found on the website. Yeah, so for tax residency of companies, it is still based on control and management of the business of the company. It is determined where the business is controlled and managed. And I also share with you one main example we look at is the location of the company's board of directors meetings. Yeah. So if you look at the link that I posted in the chat box, right, it will bring you to this page here. And also there's no change based on my understanding. Yeah. And what I covered in the slide just now, it is still based on control and management of the business. And one main indicator we use is the location of the company's board of directors meeting. So if there's no questions, then I will move on to section 12.7 relating to royalties and other type of payments. So on this slide here, you will see the provision that is taken from section 12.7. Yeah, I give you about 1 minute to read the provision. Okay, so if you look at section 12.7, right, the structure of the provision is very similar to section 12.6. You'll see that the types of incomes are listed here in A, B, C, and D. So the first type of payment will be royalty or other payment in one lump sum or otherwise for the use of or the right to use any movable property. Then B, there's actually two parts to it. So the first part is any payment for the use or the right to use scientific, technical, industrial, or commercial knowledge or information. This one, we generally call it the know-how types of payment. And there's a second part to part B, which is for the rendering of assistance or service in connection with such know-how. So the second part here is we commonly call it show how, technical assistance and service. Okay. Then the third category of payment covered under Section 12.7 is any payment for the management or assistance in the management of any trade, business, or profession. Then the last type of payment will be rent or other payment under any agreement or arrangement for the use of any movable property. Yeah. So the list here are the types of payment covered under 12.7. And this type of payment will be subject to withholding tax if the following two conditions here are met. So these two conditions are also the same as Section 12.6A, which is borne directly or indirectly by a person resident in Singapore or a PE in Singapore, with the same exception here, except in respect of any business carried on outside Singapore through a PE outside Singapore. And the second condition is the same, deductible against any income accruing in or derived from Singapore. Okay, so in this section here, you will see that we keep referring to the right to use something, right? Yeah. So with effect from 28 Feb 2013, IRAS came out with more guidance on rights-based approach to determine the type of payments which are subject to withholding tax under 12.7A and 12.7B, the first part relating to the know-how. So how do we determine whether such payment are falling under these two sections? So we use this rights-based approach, and what we mean is that we look at whether the payment is based on the nature of the rights transfer, whether it's a copyright right or a copyrighted article. So it is a copyright right, then it will be subject to withholding tax. If it is a copyrighted article, then it will not be caught under Section 12.7A and 12.7B and not subject to withholding tax. So if the payer is allowed to commercially exploit the copyright, then it is considered as a copyright right. Okay. And then the payment to the non-resident are considered as royalties and subject to withholding tax. However, if the right is limited to those necessary to enable the payer to operate the software or to use information or digitized goods for personal consumption or for use within his own business operations, then these are considered as copyrighted article and treated as business income and not subject to withholding tax. So these are not considered as royalties. And what do we mean by commercially exploit? It is further explained here at the bottom. Here, this means to be able to reproduce, modify, or adapt and distribute the software or prepare derivative works based on the copyrighted software program for distribution. So there is a IRAS e-tax guide published on this rights-based approach, which you can refer to in your own free time. So similar to Section 12.6, we also have Section 12.7A, which mirrors the Section 12.6A, which talk about when services are provided outside Singapore, then it is not subject to withholding tax. So all these are in line with our territorial basis of taxation, where only income sourced in Singapore are subject to withholding.
Recording stopped.
So same as Section 12.6A, we also define the terms like non-resident person in 12.7A. So this is actually the same as 12.6A. Okay, let's try a poll question to apply the concept I explained just now. So in this question, company XYZ is incorporated in the UK and has a branch in Singapore. On 15 Jan 2023, the Singapore branch paid $100 to an India company for the right to use a proprietary antivirus software. The India company is a resident of India and does not have a PE in Singapore. Under the license agreement, the Singapore branch is not allowed to commercially exploit the copyright. Assume no tax treaty is applicable in this case. Is there any withholding tax on the license fee paid by the Singapore branch to the India company? Option 1, yes. Option 2, no.
Recording in progress.
Okay, so the answer should be, yeah, most of you got the question correct. In this case, the payer cannot commercially exploit the copy. So by applying the rights-based approach, then the payment will not be will not be characterized as royalties within the scope of Section 7A, and therefore withholding tax under Section 45A of the Income Tax Act is not required. Okay, let's try another question. So in this case, it is the same question as just now, except that now the India company offers the Singapore branch the option to pay $1,000 a month to have the flexibility to reproduce and share the software with its related parties. The Singapore branch decided to exercise this option and paid the first license fees on 1st June 2023. Is there any withholding tax monthly license fee paid by the Singapore branch to the India company? Option 1, yes. Option 2, no. The answer should be option 1, yes. Yeah, most of you got the question correct. And in this case, the payer can now reproduce and share the software with its related parties, which means that it can commercially exploit the copyright. So therefore, under the rights-based approach, the payment will be characterized as royalties within the scope of Section 12A, and withholding tax will be applicable under Section 45A of the Income Tax Act. Yeah, I think there are some questions in the chat box. So maybe I take a pause here to look at the question. Okay, on the bringing in of the Income Tax Act and GST Act, I just want to make more clarification. So you can bring those in, but do not highlight or tag the Income Tax Act. So they should be clean copies, okay? Don't go and write other notes into the Income Tax Act. Okay, okay, Jean has given another link for the earlier question on tax residency. I think the source for this is, okay. Okay, this one I'll check later on, come back later. Then there's a question from Pei Jie on what is the difference between section 12.7a and 12.7d pertaining to the use of or the right to use any movable property. Can give an example. Okay, so basically for 12.7a and 12.7d, right? Let's go back and look at the provision. So for A, the payment code here is typically the royalty or payment in one lump sum. Yeah, the description here, I mean, it's very specific. You look at the terms here, royalty or other payment in one lump sum. Whereas for D, is the type of payment is rent or other payment under any agreement or arrangement. So D is more like the rental type of payment, whereas A is more akin to the royalty type of payment in one lump sum. And both relates to movable property. So for A, the example I can give you is maybe intellectual property, right? Yeah, and then you pay royalty based on lump sum or otherwise, because sometimes the royalty could be also based on other basis of calculation. It may not be in one lump sum. It could be a percentage of, let's say, sales for the use of the intellectual property. Then for D, rent or other payment. So this one, it could be relating to maybe rental of a ship or a vessel or aircraft, or even like yeah, so you pay rent as provided under any agreement for that ship or aircraft. There's a question from Chia Kiong on slide 32, the copyrighted article, why payments to non-resident is business income instead of business expense. Okay, what we are saying in slide 32, right, the payment to the non-resident is wrong. We are saying that it is a business income in the hands of that non-resident. Yeah, we're not talking about from the perspective of the payer here. And payments to non-tax resident are treated as business income. Okay. Business income of that non-tax resident and not royalties. Any other questions or clarification required? So for the tax residency question and the additional link provided by Jean, I will check on it later and come back to the class. Yeah. Okay, now I'll move on to the domestic withholding tax rate applicable for Section 12.7. So for Section 12.7, if it is a payment caught under 12.7A and 12.7B, the first part on know-how, a final withholding tax rate of 10% will be applicable. If it is a payment under 12.7D, rent or other payments for the use of movable property, then a final withholding tax rate of 15% will be applicable. If it's 12.7D relating to charter fees for aircraft or charter fees for aircraft, it will be subject to a final withholding tax rate of 2%. And if it is a charter fee for ships, currently for such a payment, it is exempted under our domestic tax law. So for these rates, right, since they are final, then no further claim will be allowed. But based on a similar concept as I explained for Section 12.6 interest just now, if the non-resident has a PE or trade or business in Singapore, you can actually apply withholding tax rate based on the prevailing corporate income tax rate of 17%. And then that non-resident can file a tax return to claim relevant deductions. And similarly, the withholding tax rate can be reduced or exempted under a tax treaty, which we will cover later on. Okay. Then there are also other income tax exemption or incentives provided under our domestic tax law, but for the purpose of your learning and exam, these are not covered within the scope. Okay, so for 12.7 types of payment, those relating to services, for example, Section 12.7B, the second part on show how, technical assistance or service fee, and also 12.7C management fees, the relevant withholding tax rate will be the prevailing corporate income tax rate, which is currently 17%. So since it is based on 17%, this is not a final withholding tax rate. The non-tax resident can actually file a return to claim relevant deductions, if any. And if the services are rendered is different from the year of payment, we will apply the tax rate for the year in which the services are rendered. So let's say if the services are provided in the year 2024, but they only make payment in 2025, then we should apply the withholding tax in the year 2024 and not 2025. Okay, this one I mentioned just now, withholding tax rate is on the gross and not a final tax, and they may file a tax return to claim for relevant expenses, if any. Okay, let's try a question here. Company XYZ is incorporated in UK, so it's the same as just now. Yeah. What is the amount of withholding tax due to IRAS? Okay, the answer should be option 2, $100. Okay, why is it option 2, $100? In this case, the $1,000 that the Singapore branch pay to the Indian company is considered as a payment under section 12(7)(a) royalty. So just now in the earlier slide on the table showing the withholding tax rate, mentioned that section 12(7)(a) payment will be subject to final withholding tax rate of 10%. Yeah. So $1,000 times 10% will give you $100, which is option B here. And why is it not option A, which I think quite a number of you chose 111.11, okay? It is not option 1 because the question does not tell us that the contract provides that it is net of tax, meaning that the tax will be borne by the payer. So we don't assume that it is net of tax. Generally, we will assume that it is not net of tax unless otherwise stated in the question, okay? And in practice as well. So basically, you will just use the gross amount and apply by the relevant withholding tax rate. And I think some of you chose $170, option 3. It is also not option 3 because I think to arrive at 170, meaning that you will be using $1,000 times 17%. In this case, 17% is not the relevant withholding tax rate because this is a royalty payment based on final withholding tax rate of 10%. And also, the question already say that the Indian company does not have a PE in Singapore. Since it does not have a PE, then the prevailing corporate tax rate will not be applicable as well. Okay. I think one person chose option 4, 0. Not sure why, but the question doesn't state that withholding tax is exempted. Okay, the next few slides shows the waiver of withholding tax on payment made to Singapore branch of non-tax resident. These are for your information. Okay, there's a comment in the chat box from Jean. Option 4 is chosen. Is it because it is to related parties, hence not considered commercially exploited? Okay, the answer should be, even if it is to related parties, it does not satisfy the definition of commercially exploited. All the more if you make payment to related parties, I think there should be a stricter requirement. Yeah, so if you look at the slide on the definition of commercially exploited, I don't think there is any exception for payments between related parties. So it is not option 4 based on the reason suggested by Jean. Yeah. What if the question is changed to subsidiaries? Is it commercially exploited? The commercially exploited condition and definition applies to all parties, whether related or not. Okay, and for related parties, they must always transact at arm's length as provided under our Income Tax Act. So then the condition will become the same as non-related parties. So Jean, are you clear on this? If not, you want to unmute to ask further questions? Okay, thanks, Jean. So any question on 12(7)? If not, then I'll move on to the next part, withholding tax under double tax treaty. There will also be a case study at the end of the session, which is similar to exam question, and I will go through that later. Okay, so withholding tax under tax treaty. So what are tax treaty? These are double tax agreement, and they serve important functions which include to prevent double taxation of income earned in one jurisdiction by a tax resident of the other jurisdiction. So it helps to reduce business costs. And we also use tax treaties to reduce or exempt tax on certain types of income that we want to promote bilateral trade or investments. The payer can claim for reduced or exempted withholding tax under the relevant tax treaty by checking the non-resident's eligibility and also submitting the non-resident's certificate of residence to IRAS by the due date. So some important principles that we should bear in mind between our Income Tax Act and tax treaties. So first of all, tax treaties do not create taxing right. So in our Income Tax Act, if we say that a particular type of payment or income is not taxable, we cannot then use the tax treaty to say that we want to tax that income. Okay. So first of all, we should always look under our domestic tax law whether we have the taxing right. If not, then we don't use the tax treaty to create additional taxing right. Yeah. The tax treaty is merely to reduce or exempt certain tax. And the second principle is that any reduced tax or exemption under the tax treaty is on due claim by the local payer or the non-resident. Yeah, so IRAS will not automatically gives you the reduced or exempt rate as provided under the tax treaty. It's only upon due claim. So if you know that you qualify, then you make the claim, and then IRAS will examine and see whether to allow you the reduced or exempt tax rate as provided under the tax treaty. And talking about the conditions under the tax treaty, so usually IRAS will need to be satisfied that the conditions are met. And typically the conditions are as stated in these three sub-bullet point here, whether the non-resident is a resident of the other contracting state of the tax treaty. Yeah, so that is the first requirement. You need to be a resident of the other contracting state of the tax treaty in order to claim for the benefits. And the second condition is whether the non-resident is the beneficial owner of the income. So this is a common condition for dividends, interest, and royalties income in the tax treaty. And in some tax treaty, there may be other specific conditions provided. Yeah, so we should look at the tax treaty on a case-by-case basis. Then the third general condition will be, the third general feature of tax treaty will be usually the tax treaty will provide that for exclusive resident state taxation, meaning that only the jurisdiction of that non-resident can tax the income, or Singapore and the other contracting state decides to share taxation, yeah, of that the income concerned. So in this slide here, we have taken extract from some of the tax treaty on the common articles. So there's a business profits article that you see here. We talk about profits of the non-resident will only be taxable in the source state if it carries on a PE in the source state. Yeah. So in short, we say if you don't have a PE in the source contracting state, then there is no tax. So this is a common feature for business profits. Then next we look at interest and royalties article provided in the tax treaty. So these are some of the common wording that you will see in the tax treaty. So just now I mentioned there are two main methods of taxing under the tax treaty. The first one would be the exclusive resident state taxation here, where only the resident contracting state tax that person, meaning that the jurisdiction of the non-resident will be the only jurisdiction taxing the income. Yeah, so we give up our taxing right to the other side, and vice versa lah. So if for our resident who is considered a non-resident in the other country, then Singapore will have the sole exclusive taxing right. So the other country does not tax our resident. Okay, so it works bilaterally both ways. Then the other common way that we structure the taxing right would be shared taxation. So for example, interest or royalty arising in a jurisdiction and paid to a resident of the other jurisdiction may also be taxed over there. So both jurisdictions share taxing right. However, we typically will provide for a taxing rate here, which is lower than the relevant domestic tax rate. Yeah. So that is how double tax treaty benefits the non-resident. Okay, let's look at our question. Yeah. So this is the same as just now for the UK company with a branch in Singapore, and the Singapore branch paying $100 to the India company for the right to use proprietary antivirus software. So now we assume there is a tax treaty between Singapore and India, which includes the following provisions in the royalties article. Royalties arising in a contracting state and paid to a resident of the other contracting state may be taxed in the other state. Yeah, so this one we are sharing taxing right between Singapore and India. However, such royalties may also be taxed in the contracting which it arises and according to the laws of that state. But if the beneficial owner of the royalties is a resident of the other contracting state, the tax so charged shall not exceed 20% of the gross amount of the royalties. What is the withholding tax rate applicable on the monthly license fee paid by the Singapore branch to the India company? So there are 4 options here. Okay. The answer should be option 4. 10%. So although the tax treaty provides for 20% for royalties, right? As I mentioned just now, the tax treaty does not give us taxing right. Okay, so our domestic tax law, we says that the royalty will be subject to final withholding tax rate of 10%. So even though the tax treaty says 20%, we cannot use the tax treaty to say we tax the non-resident 20%. Okay. It only serves to restrict our taxing right. In this case, the tax treaty does not seem to have any benefit of restricting the taxing right below 10%. Okay, let's try another question. Okay, so the facts are same as the previous question, except that if you zoom into paragraph 2 of the royalties article, now the tax rate provided is 5% instead of 20% just now. So what is the withholding tax rate applicable on the monthly license fee paid by the Singapore branch to the India company? Okay, the answer should be option 4, 5%. The question states that they are claiming for tax treaties benefits, right? And then also the tax treaty provide for 5%. Under our domestic tax law, we can withhold tax at 10%. But since the payer is claiming for tax treaty benefits on behalf of the Indian company, then we will have to apply the tax treaty reduced rate of 5%. Yeah, so the tax treaty actually restrict our taxing right of 10% to 5%. Okay, so I've come to the end on this part on the application of tax treaty for withholding tax. So any question on this part? If not, then I move on to the last part on administrative matters on when and how to pay withholding tax to IRAS. When and how to pay withholding tax to IRAS. So the local payer is required to withhold tax at the appropriate withholding tax rate. And currently we are using e-filing, so the local payer will have to e-file with IRAS. And when will the payment be due? It will be due by the 15th day of the second month following the date of payment to the non-resident. So for example, the date of payment is 10 July 2023. Will be due by the 15th day of the second month following the date of payment. In this case, 15 September 2023. And then lastly, the local payer will also need to submit the non-resident's certificate of residence if it is claiming for a reduced or exempt withholding tax rate as provided under a tax treaty. So for the purpose of that date of payment for withholding tax, it will be based on this definition. It is not just based on the date of actual payment. We will also look at two other scenarios. If the liability to pay the income arises is based on agreement date. Okay, so in the absence of any agreement or contract, we will also look at the date of invoice to be the deemed date of payment. Then another scenario will be when the income is credited to the non-tax resident's account. Yeah. So this will also be considered as a type of date of payment. So we will look at these three different types of date of payment and see which one is the earliest date. The earliest date then will trigger the date for withholding tax rate, which is by the 15th of the second month following the date of payment. There's a clarification that was issued in IRAS e-tax guide published on 18 August 2022. So it's clarified that if it is just a mere accounting entry for accrual, then this does not trigger a date of payment for withholding tax purposes. Okay, this slide here shows you the penalties if the local payer does not comply with withholding tax. So if the local payer did not withhold tax to IRAS, there will be late payment penalties, as provided here. So you'll see that if it is after the 15th day of the second month following the date of payment, straight away there will be a 5% penalties. Then for each completed month that the withholding tax remains unpaid, there will be 1% imposed for each month, up to a maximum of 15%. So in total, the maximum total penalties will be 20%. And failure to withhold tax may also be subject to a fine, not exceeding $10,000 or imprisonment, not exceeding 3 years. And for conviction for 3 or more offences, there could be imprisonment not more than 6 months. Okay, so this is for completeness of your learning and understanding. This will not be covered for your essay. Okay, let's look at a question. This is the same facts as just now. Okay. So to recap, right, the Singapore branch decided to exercise this option and pay the first license fee on 1st March 2023. Assuming that withholding tax is applicable, when must the Singapore branch pay the withholding tax to IRAS? Okay, the answer should be option 4, 15 May 2023. In this case, the date of payment is 1st March 2023. Yeah, so that is the only information we have, right, on the date of payment. Okay, so the due date to pay to IRAS would be by 15th of the second month following the date of payment. So in this case, 15 May 2023. Okay, any question?
Hi, Esther.
Yeah, hi, Helena.
Is there any deadline for the e-filing?
It's the same one. It's the based on the due date. Yeah,
Oh, based on the
yeah, it's
payment.
together.
Oh, okay.
Yeah,
Thank you.
thanks. Okay, the chat box, there's a question from Chia Kiong. Can you give an example that apply foreign source interest income stream to? I think he is referring to the very first example that I covered this morning, right? Foreign source interest income. Yeah, so stream 2. So all those examples that I have gone through for section 12.6, right? Those are stream 2 type of example, right? Not very sure what type of example you are still looking for. And I'm talking about stream 2, not stream 3. Okay, stream 2. So it will be as per that diagram, right, where there's a company B outside Singapore. Yeah, so it is a foreign source interest income outside Singapore, but then also is received by is received in Singapore by company A. So that's the example, right, in that question. Yeah. Or do you want to unmute and let us know what is not clear from that example?
I think it's okay now.
Okay, thanks. Okay, if no question, then let's try the case study. So this slide here, we have a case study, which we try to put together everything that we have covered this morning, and likely how question 4 in the exam will look like. I think for exam, it will be slightly more detailed. Yeah, so, okay. So I suggest that we spend about 10 minutes to try this question. And after that, I will go through the answers. And also can take this time to have a short break. So maybe we will resume again at about 11:15 to run through this case study. And after that, we can also have another round of question and answer. Okay, so I see you at 11:15. So you spend the 15 minutes to try this case study, yeah, and also have a short break before we resume at 11:15.
I will, Esther, I will share the clock.
Okay, yes, thank you.
Okay.
Hey, hi everyone, welcome back. Hope you have the chance to go through the case study. Okay, let's go through the case study. Esco is a company incorporated in Singapore and has registered a branch in Malaysia. The board of directors meetings are held in Singapore. Is the company a resident of Singapore? Why? In this case, the answer is yes, the company is a resident of Singapore. And because the control and management of the company is exercised in Singapore. In this case, we mentioned that the board of directors meetings are held in Singapore. So this is a common indicator that control and management of the company is exercised in Singapore.
Sorry,
Yeah.
Esther, you are not sharing screen, right? Are you
I'm
sharing?
not sharing, sorry. Yeah,
Okay.
it's showing sharing. Okay, I try again. Just give me a minute.
Yeah, sure.
Can see my screen? You see the case study?
Yeah,
Yeah,
I
okay.
can see the screen. Just change it to need to change
Yeah,
to the
presenter mode.
presenters. Yeah,
Okay.
correct.
Yeah.
Okay, good. Now,
Okay, thanks.
Yep.
Yeah, let's go through the question again. Yeah, question 1. Esco is a company incorporated in Singapore and has registered a branch in Malaysia. The board of directors meetings are held in Singapore. So is Esco a resident of Singapore and why? So in this case, answer is yes. The control and management of the company is exercised in Singapore. Yeah. And how do we know? The question says that the board of directors meetings are held in Singapore. So this is one of the common indicator that we usually see of whether control and management of the company is exercised in Singapore. Okay. Okay, part 2, on 20th October 2023, Esco borrowed $1,000 from its parent company in Japan, Jayco, to fund its Malaysia branch, business operations in Malaysia. Jayco is a resident of Japan and does not have a PE in Singapore. On 20th November 2023, Esco paid interest of $100 to Jayco. The Malaysia branch profits was remitted to Singapore at the end of 2023. Is there any withholding tax on interest paid by Esco to Jayco and why? Okay, the answer is no. Section 12.6 is not applicable. So as I mentioned just now, when we apply Section 12.6, you look at whether it falls under the type of payment under 12.6a or 12.6b, and then the relevant conditions, right? So in this case, the payment was in connection with a loan obtained from outside Singapore in Japan in respect of a business carried on outside Singapore through a PE outside Singapore, i.e. the Malaysia branch. So this is the exception that is covered under Section 12.6a, condition 1, the exception in that condition. So basically it does not meet the condition for withholding tax. And then the interest was not claimed against any income accruing in or derived from Singapore. So the second condition in Section 12.6a, condition 2, is also not met. And in this case, 12.6b is also not met. The fund was not brought into or used in Singapore, i.e. used by ESCO to fund Malaysia branch business operation. Yeah. So the fund was actually used to fund Malaysia branch business operation. Is a PE outside Singapore, right? So it was not brought into or used in Singapore, and therefore it also does not meet section 12(6)(b) for withholding tax. Okay, part 3. Now, assuming your answer to part 2 is yes, what is the amount of withholding tax based on domestic law? Okay. Whether the amount of withholding tax will be affected under the tax treaty between Singapore and Japan, and if so, compute the amount of withholding tax under the tax treaty. And part 3, compute the amount of withholding tax if the loan agreement provides that the interest of $100 is net of tax. And the question provides that the interest article of the Singapore-Japan tax treaty states that the tax so charged shall not exceed 10% of the gross amount of the interest. So for part 1, based on domestic withholding tax rate, right, the final tax rate, withholding tax rate for interest would be 15%. So it's very straightforward. You take $100 of the interest and multiply by 15%. So answer is $15 withholding tax based on domestic law. Okay. And part 2, yes, the tax treaty between Singapore and Japan applies, as it is already mentioned in the question that JCO is a tax resident of Japan. So that is one key principle and condition to satisfy. The non-resident must be a resident of the other country, in this case Japan. Okay. Then the amount of withholding tax under the Singapore-Japan tax treaty will be reduced to $10 because the tax treaty interest article states that the tax so charged shall not exceed 10%. Okay, so you take $100 times 10% as provided under the tax treaty, and the amount of withholding tax will be $10 instead of $15 under our domestic law. Okay, the last part on withholding tax, if it is borne by ESCO, meaning that the contract provides that the interest to be received by JCO $100 is net of withholding tax. So you use $100 and regross it to the relevant withholding tax rate. In this case, 10% is the withholding tax rate because it is reduced under the tax treaty. So after regrossing, the regross amount will be $111.11. Okay. So you either use this regross amount multiplied by 10% as provided under the tax treaty, which will give you $11.11. Or alternatively, you can use the regross amount then minus the amount that is paid to the JCO $100, and you get the same answer, $11.11 for withholding tax. Any question for the case study? If not, then that will be the end of my training for today. Or any questions relating to the earlier parts that I covered this morning, can feel free to ask questions because we still have a lot of time left.
Hi Esther, Ivana here.
Yes.
Can I check, do we need to quote the section? for exam purpose?
It depends on the question, right? I think what we look out for will be application of the principle. Yeah.
Okay, thank you.
Sometimes I also cannot really say that if you don't quote, then how do you support your answer, you see?
Okay, so my point is that is it okay we just quote the section
Oh, you mean just
12.6?
quote and then without,
Ah,
no, I think you still have to highlight that which part of that section that you're applying to support your answer, right? I mean, if you just tell me withholding tax is applicable under section 12.6, then that's not sufficient.
okay.
So you need to elaborate why is it applicable under section 12.6. Yeah, which part of section 12.6 support your understanding and the answer. Okay, there's a question in the chat box from Daphne. Share with us the exam format. How many open-ended questions or marks? Daphne, for just like at the start of my sharing, right, I mentioned that your exam will be consisting of two sections. Section A will be covering income tax topics, and then section B on GST topic. So for section A, it will be 80%, and then section B, GST will be 20%. Yeah, so that's the marks allocation. For withholding tax today, right, will be in question 4 in section A, which is for 10 marks, 10%. And for question, I can only comment on question 4 because I'm not the examiner for the other topics. So for question 4, it will be similar to what you're seeing here for the case study. Maybe a little bit more because 10 marks, right? I think that could be one more part. Yeah, usually I will split into 3 or 4 short questions like this to test your understanding of the key principle. Okay, somebody
Sorry,
asked,
this GST in section B is different from the GST in question 5, is it?
yeah, question 5 will be section B.
Oh, question 5 is section B.
So section A will be question 1 to 4.
Oh,
Tax is
okay.
question 4.
Okay.
Section B will be on GST, which I think you rightly pointed out is question 5. Yeah. Okay.
So within question 4 is 3 to 4 short questions.
Yeah, it will be something like this case study.
Okay,
Like
thank
give
you.
you a scenario, then ask you a few questions to test on your understanding of the key principles of withholding tax. It could be qualitative, it can also be quantitative, okay? Yeah, I think sorry, I don't know how to pronounce your name. Is it Canwell asking for a link to download the Income Tax Act and GST Act? You can actually access a copy from statutes online. Okay. You just do a search Singapore Income Tax Act in Google. I think it will bring you to this AGC website where it includes all the statutes. It's called Statutes Online. Let me find the link and then post it here. Just give me a minute. Yeah, I just posted the link to your question in the chat box. You can go to AGC's website to access all the acts in Singapore. Welcome. There's a question from Nadira. Okay. For case study question 2, do we assume that the loan directly went to the Malaysia branch and not received by the Singapore branch first? Yeah, in this case, yes, we assume that the fund was not received by the Singapore company. Alistair asked, the full text ad is huge, so we just pick the section covers in the tutorials and print it. That can be an option. You don't need to bring the full ad. Yeah, you can choose to bring in the parts that you want, but just make sure they are clean copies. If you tag or highlight or write anything, then it may be construed as cheating. So to play safe, just make sure that whatever parts of the text ad or the full ad that you bring in is a clean copy. Welcome. Okay. So any other question? If you don't have any question today, after today's session, well, you go through your revision. If you have any question, you can also send them to CPA Australia or Tax Academy. They will then send to me and I'll try to address them.
Yeah, before you leave, please take some time to complete the evaluation form. I put the link in the chat box. I also will share the QR code. Esther, is it okay if I share it now?
Yes, sure. Thanks.
Okay, thank you.
So thanks everyone for paying attention and your time today. I wish you all the best for your exam next month.